Sunday, June 25th, 0902 a.m. New York time. Good morning. Happy Sunday. Futures will be open this evening, 6 p.m. New York time. This is the end of the trading week review. You're looking at the intraday charts, at the 1 hour charts. The whole chart is showing the past 10 trading days. We're concerned of the past 5 trading days. So past Sunday, the S&P 500 futures opened here above big round numbers 4450. I'll say this one time here. I'll show you these solid horizontal lines, big round numbers 4450, 4500. The dotted horizontal lines are quarters ending in 75 and 25. Significant numbers. So Sunday night opened above it, did a consolidation around it, broke below it, went down to this prior demand zone, which was the midpoint off a 4-hour candle. Very important. Tested it, broke below it, reversed, popped above. Didn't do a big consolidation down here. Did a V pattern. A lot of times those fill, which in this case it did. Did a V pattern and rolled over, continued going lower, breaking again, quarters, 44.25, going down to this demand zone. What's a demand zone? Demand zone is a prior area. There are buyers right here. So also is a swing low, 4,400, big round number. Yep. Buyer stepped in there. Buyer stepped in here. Consolidation, still went lower. Consolidation and reversed, popped up to 44.25. Remember, often prices test in between those ranges, those levels. So when they reject one level, such as big round number 4,400, often they go up to that next, which happens to be the quarters here. Trading opportunities in between those. And then look, filled here to mean continue to go to the momentum to the upside. The energy got tired. The bulls got tired. The bears took over. Reversed the trend, went down again, back to big round numbers, 4,400. Consolidation. Break down further. Big impulse move down here. Selling. Panic selling. Retracement. Again, panic selling here. And that's how we ended Friday. Just above here. Yep. Again, 4-hour midpoint. So again, these significant areas I just showed you, these prior demand zones on the bottom versus on the top supply zones, have acted as areas where they gravitate to prices or prices consolidate. Put this on the, and we also have this gap down here that's not gotten filled yet. So maybe we'll have panic selling continue pushing it lower into this gap to fill the gap. And after that panic selling, one should be looking to be buying on the bullish side. Could even come here because we have what coming forward in days ahead. Holiday, United States holiday, Independence. It is not the 4th of July. It is Independence Day. Huge difference. Every nation has a 4th of July. It's a calendar day. That's all it is. Just happens to be that the United States changed the day Independence Day falls on. Originally, it was not on the calendar day, 4th of July. So please call it what it is, Independence Day. 4th of July does not give significant meaning of what occurred on that historical day. So here we're looking at the 4-hour. If you can see again, here's that midpoint of that big 4-hour candle. And here's a big 4-hour candle, midpoint. Yep. Keep it back there. Let's go on to the next financial instrument. The 10-year yields. Again, yields, when yields go higher, interest rates go higher. Yields go lower, interest rates go lower. Correlation. Yields, interest rates, and then the bonds go inverse. So here is Sunday night. Now let's look here too. On the 1-hour chart in the S&P 500, very clear defined trend going down. That's a clear trend. Versus the past week here in the 10-year yield. Yeah, there was a lot of chop, a lot of whipsaw. So we come here. So past Sunday was here, opened here, went up higher. Just shy of touching this supply zone, and panic selling came in, brought it back down to a supply zone, reversed, come back down to supply zone again on Wednesday, popped up again, and then coming Friday, broke below the supply zone and bounced again. From that prior week, you see also a lot of whipsaw here. That's because a lot of talking heads are making obnoxious comments about Interest rates going to be lowered soon. Interest rate raising is ending. Those people don't vote. They're not part of the Federal Reserve. There's only a few members of the Federal Reserve that get to vote. So you can have comments from many Federal Reserves, many politicians, many TV hosts that have no vote on the choice of raising or lowering or leaving interest rates alone. They're obnoxious. They do disjustice to the trading community and the whole community as a whole. Again, because they create panic selling. Again, there's no chance that they have, let's just say, skin in the game equal to anybody else. We all have skin in the game where they make it appear they may have more skin in the game than anybody else. No, they're talking heads. We all have equal skin in the game. You may not be trading the financial instruments, but the repercussions are equal. Not equal to how much wealth you make or lose, but the hardships that could be occurred. US dollar index. Here we go, past Sunday. It went higher. Again, a lot of chop for the whole week, but there was a trend from Sunday night to Wednesday. Panic selling. Look at that panic selling coming down here. This prior swing low. Yep, prior swing low. Consolidation. Thursday popped a little bit lower and then reversed. So from Thursday, interesting, Thursday was the low of the week. And then from that point on, we also made the high of the week. Never went back into this zone up here, supply zone. Crude oil. That's Sunday night here. Much of a consolidation Sunday, Tuesday, and then regular trading hours Tuesday when it went up here, which is the retest. Look, swing high here above 72. Huge sell-off coming down here. 4-hour midpoint. Very good that I labeled those. Touched it. Again, huge panic selling. That was Tuesday. Bullish pin bars. Nice reversal. Good opportunity to reload. Again, I've been sharing you with weeks that I'm bullish bias crude oil. I have crude oil long positions with the stock ETF on options. Nice reversal. Went up, popped above. This was a prior supply zone, popped above it, and rolled over again. Panic selling. Panic selling Thursday. Coming down Friday. Bullish pin bar. Friday came down, test this area. I think that's just a swing low. Yep, it's just a swing low. So one new to sit on hands and watch it come and retest it, see the reaction. Had that 1-hour candle. You could have done a day trade here. Nice. I waited till that candle got done and take your entry on top of that if you're using the 1-hour chart time frame. Let's put this also on the 4-hour just to see if some stuff may be more stand out better. Okay, there's that midpoint on that green candle. Look at that test, rejection, massive panic selling. Huge wick. So the geopolitical events that just happened the past days in Eastern Europe with the nation of Russia, where do you think crude oil is going to go tonight, Monday? Looking at gold, here is Sunday night, past Sunday night gold, trending down. Huge sell-off, panic selling on Tuesday, coming into a prior swing low, popped above 1950, rejected it. Huge impulse move, which panic selling below it, broke below it. Reversal. Again, I have been bearish bias gold for weeks. I'm not buying gold in these pops. No, not yet. And then gold, again, huge panic selling. Numbers, quarters. Consolidation popped. Big impulse move up on that Friday morning. And then that big bearish pin bar reversal. Yep, it was just a pump and dump. On to the next. The euro, of course, trading inverse from the US dollar. So euro, huge tight trading range Sunday night here, all the way to Wednesday. Hovering, I think that's a midpoint. Yeah, that's 4-hour midpoint. So 4-hour midpoint here on the euro. Again, this is a 1-hour chart. Massive consolidation above it and touching it. Impulse move up. Went to numbers, ending in 105. Reversed. Again, huge panic selling Thursday. Again, huge panic selling because geopolitical events going on and economic events, flight into the safety. US dollar, one of the safe haven currencies. So flight out of the euro into US dollar, even further panic selling. Pre-market on Friday went down to big numbers. Huge consolidation here, retested it. Excuse me. Looking at the British pound. Yeah, British pound trending down. Tested here. Midpoint. Went lower, tested this. Reversed. And that big pop on the British pound, huge amount of selling there. Huge whipsaw. It's part of it is geopolitically, economically, because they raised their interest rates. They also having other problems much worse than the United States with their economy. Yeah, they're struggling even more for the cost of living there. And then sell off. Again, they are much more affected also. The war going on in the Eastern Europe. They have more skin in the game. Same with all the European countries. And the Australian dollar, there we go from Sunday. Again, Australia, Canada, New Zealand, they're heavily commodity-based countries. That's one of their biggest products. The energy commodity, the agricultural commodities, the metal commodities being gold, crude oil, soy. Yeah, so huge sell-off in those commodities or sell-off on the currencies, flight into the US dollar. So look at here, Australian dollar panic selling. Huge panic selling down here. And further, so Australian dollar near the lows of the week. Canadian dollar holding up much better being a commodity-based country. Sunday night here, popped, reversed, went down here. Bullish pin bar, nice. Huge trading range to be concerned of. And then from that Tuesday, reversed, big different again. Then the Australian dollar went up, popped above big round numbers, ending in 7,600 again. It says 76, but there's 2 zeros to the right of it. Consolidation, and then again, panic selling, flight into safety US dollar. Now let's look at the agricultural section of the commodities, grains and livestock. Same thing, 1 hour chart, past 5 trading days. Remember, Monday was a holiday. So we opened here. This is corn futures. Look at this from Monday, went higher, higher, higher. That was the high of the week. And then reversed. Again, commodities are priced in US dollars. Again, still higher than that prior week. Corn futures. Corn futures are used for feed for animal. Corn futures are also corn, not necessarily futures, but corn itself used for feed for animals, used for ethanol, and also for human consumption. Many uses corn has. Look at the wheat futures. Yeah, there we go. Past Monday. That was the low of the week the same day, and then took off like a rocket ship. New high for the week. Wheat futures. Where do you think they're going to go come Sunday night, Monday, when the market's open? Soy. Monday. Past Monday. Trend higher. High of the week. And much of a consolidation here. Now we'll look at the livestock, live cattle. That was the past Monday. Huge sell-off. Bullish engulfing candle right there on the 1 hour. Nice and a retracement. Big V pattern. Yeah. Feeder cattle. There we go. It's past Monday. Bearish pin bar, sell-off, panic selling. Massive consolidation, lots of inside candles, nice. Almost like a bearish flag, but proved to be wrong. Look at that, popped up and reversal, almost to the highs of the prior week. And lean hog. That was Monday. Consolidation, popped higher. Wednesday, the high of the week, which again went above the high of the year. And huge panic selling. A lot of whipsaw. That's it for this video. Thanks for watching. Sunday, August 25th, 09:55 a.m. Looking at zone to zone trading plan and a review for the past week.